In this video, I'm going to show you exactly how I took a losing week to a profitable week in just the matter of minutes or hours. But before we get started, I just want to tell you who I am. My name is Alin, and I've been predicting and documenting the Nasdaq since 2023 and on to 2024, and I plan on doing it for as many years as possible until I cannot mention the years anymore. The reason why I share all of these videos is for you to learn from my mistakes so you do not have to do them. I also want you to avoid the mass mindset, which leads to failure, and I hopefully show you the right way of doing this, which might sound uncomfortable. What I'm not going to do is I'm not going to tell you what to do. I'm only going to tell you what I've did and how I overcame some failures, how I overcame some mistakes that I've did, and I never regurgitate anything from anyone. And I also never tell you to trade with these exact same concepts, with the exact same process that I follow, because I never tell you to trade live, and I will never do that. But before we even get into the breakdowns in themselves, I want to tell you how I do my analysis and how I come to the conclusions inside of a 1 minute chart. So before I even open up a 1 minute chart, what I do prior to the month starting and prior to the week starting is to go on and analyze every singular signature that I see on a monthly and on a weekly chart. So my analysis, even before I go into a 15-minute chart or 1 hour chart or whatever intraday charts, it starts with a weekly and a monthly premise, because without these premises I would not be able to trade with the same amount of precision that I am able to achieve on an intraday basis. So I'm not going to discuss the monthly analysis that I've had for the month of September, but I'm just going to go briefly to the weekly and Q chart, what I anticipated prior to the week starting, and how I was so sure that the market is not going to go to the downside and it is not going to take me out. The first thing that we are going to look at inside of the weekly chart are going to be the signatures. Now, what you're seeing here is I also have monthly levels. So as you can see here, we have the monthly constant corresponding of the tail. We also have a means of a BC here. So the market came down into it. We made an intermediate term low as a means of the weekly chart. Then we rallied away from it. I never wanted to see this being taken in the first place. And we indeed never saw this taken in the first place. This is where the month of September starts. And I've told you that inside of my signatures, the one that I've studied on my own, so they're not from ICT, I have studied a lot of accumulation, manipulation, and distribution. As I have anticipated this low to not be taken inside of the month of September, what I anticipated this first week and the second week of September to be, I anticipated these weeks to be the accumulation and the manipulation to the downside. I never wanted to see the price go below this in the first place when I did my monthly analysis, and we never did. Now, for the entirety of the year of 2024, I still want to see the Nasdaq above the 20,730.4 level. I want to see the market go above this one. I want to see the market create a new all-time high. And therefore, my bias for the monthly and the weekly chart is going to be bullish. So everything that I'm going to see inside of these charts is going to be strictly one-sided. Every singular signature that I want to see has to be respected in order for my analysis to be correct. Therefore, I saw this as a means of a swing low, because we have this low, we have a higher low to the right, a higher low to the left, and then this is a balanced price range, because we have the market opening, going back to the downside, delivering a means of sell side, and then we had immediate buy side delivery. So there is no reason, once this week closed, to go back into the 50% of this order block or this balanced price range. This is the week that we're looking at. So for this week of September, I already anticipated the market to not go even to the 50% of this BPR. And therefore, as we closed above this weekly consequent correction of the tail, I wanted to see this as a means of support, and then onto the level of buy side that we have right here, and then onto this fair value gap that I ultimately see as a means of inversion. So these were my targets for this week. This was my analysis for this week. And as I've had a bullish bias, and as I knew where the market should go in terms of creating the low of the week, what I do after is I go into the high impact news drivers. So you can already see how I plan my trades, how I plan the days in which I already want to see the market going into my targets, and how I avoid the days in which I do not have to trade because they're going to be low volatility. So as we can see here, we have no big rocks in terms of the FOMC or any major event like NFP or some of those events that are very impactful for the week. We've had the Fed Chair Powell speaks on Thursday, but that's pretty much it. So therefore, my days of trading are not going to be Monday and Friday. So therefore, the rest of the week on Tuesday, Wednesday, and perhaps Thursday's AM session, I was going to trade and I was going to go long as a means of my analysis being indeed bullish for the weekly chart. I already know which days I'm going to trade. I already know which direction I'm going to have even before the week starts, and I already know where I want to see the low of the week being created in a bullish scenario. And if the market never does these things that I'm anticipating, I also have scenarios in which the market denies my narrative. So this is 2 trades that I've taken inside of Tuesday. The first one is a loss mitigation. So it was a profitable position, and then I have successfully protected my capital, and I did not take a loss where indeed I could have taken a loss very easily. But I'm going to tell you exactly how I did this. And after 1 hour, I took another position in the same direction with the same premise, and I've got a winning position, and you can see how beautiful this run was and how we anticipated absolutely every 1 minute candlestick. So right here, as I already told you, my daily bias was bullish because of my weekly bias indeed being bullish. I was already anticipating the market to create the low of the week on Monday due to my daily confluences. And then what I saw is my model, which was involving a 15-minute PD array along with the daily bias and the daily direction. We've had a means of sell side being taken. The market was inside of the 750 to 810 macro. And then what I did was I went long, anticipating this inversion gap to become an inversion gap. We saw the market beautifully going to the upside, but we fell short of this high in this particular run. Now, how did I know that the market is going to turn on me, and how did I protect my stop loss? How did I go out on better than break even, and how did I know that the market is indeed going to go below my stop? We have the 3 PD arrays rule. My first PD array, which I would never want to see fail if we were indeed going to go for this level of buy side, was this fair value gap. If the market would have closed, and it indeed closed below that fair value gap, then my next line of defense for my bullish idea would have been the auto block high. As the market closed below it, that failed as well. And then, as you can see inside of my trade, the 50% of this auto block, if that got violated and we closed below it, I would automatically close the trade and I would never care about the outcome. And this saved my stop loss. So even if the market would have went only inside of this auto block or this fair value gap and then it would have rallied higher, I wouldn't even care, because most of the times when the market closes below the 50% of this auto block, it is going to go to the downside. So I only care about the rule in itself. I do not count exceptions as a rule. And this saved me more than it hurt me. So I do not care whether I miss a move or not. I just care that I have successfully protected my capital. Then the market did the same thing, went below and took a means of sell side. And this was a much clearer sell side. And this was an also much clearer target for a 15-minute period to send price higher. And these were beautiful equal highs that we could have targeted after the 8:30 opening. The market went below this level of sell stops. And then between, again, the 8:50 to 9:10 macro, because that is the only time in which I trade instead of a macro, when the movement begins, the movement that I already anticipate even before the week starts, the market went to the 50% of this weekly period. We rallied higher, and absolutely every singular signature that I wanted to see was seen inside of the chart. And I'm going to give you an example. Right here, when this candlestick was closing, I already typed out that this is going to be a breakaway gap. So we indeed wanted to see this being open. And then how do I look at this inversion gap? And what did I take my trade based on? I've had a position after this candlestick closed. I've had a position with the long inside of the 25% of this inversion gap. I had my stop loss below the 75% or the 25% of this order block, which is also a propulsion block. And I never wanted to see the market go below or even fill this gap. So right here, as we closed above this 25%, as I was already anticipating this inversion gap to be an inversion gap, or I already anticipated the market to close above the 25% and to leave this weekly period. Therefore, I took a position based on that anticipation, and then we saw an immediate rebalance, which signals what? Speed. We never saw this being filled, so this is a sign of strength. The market went to the 75% again, and then we closed above the inversion gap. And this is a signature that I've studied on my own, where it tells me that this inversion gap is never going to be retouched. So in this candlestick, I already knew that the market is not going to fill in this inversion gap, and I therefore anticipated a high probability scenario above this buy side liquidity pool. As you can see here, I pre-typed that my stop loss is going to be moved at break even as we reach the 75% of the implied dealing range. And what the implied dealing range is you take the low down to my target. The 75% of that is going to be around here. As you can see, all of the annotations are done live. So everything that you see here is done through a live execution. So the market was open, the market was live. And you can see me typing all of these things inside of the chart before they happened. And don't believe me, go and look at all of these videos. They're going to be in my description. And you're going to see, I know they do not have a lot of views because I do not like to market. But you can go and look at all of these things that I've talked about. And there's going to be one more thing that I'm going to talk about in this video, which is a highly precise launch macro 1050 to 1110 tape reading, and that is going to be it. So stick with me for a couple of minutes. This right here is absolutely perfect. So as you can see, I have again my daily bias to the upside. I've had my winning position for the day, so I did not want to trade the launch macro, but I could tape read it. So what I wanted to see between the 1050 to 1110, when the market was dropping into the 930 to 1030, I anticipated the market to shift and to attack the previous range AM session buy side, which is a specific for my model. And all of these signatures, again, you're going to see them inside of the video, but basically this is a swing low. This would form my 1050 to 1110 macro market structure shift. The market only went into the 75% of this fair value gap. This is a sign of strength. A breakaway gap. Market closes above this inversion order block, which was annotated before the fact. We've had the market use it as a means of inversion. And then one breakaway gap, two breakaway gaps. This is going to be strong to the upside. These were my targets, and as soon as we hit them, and as soon as the market also took this targets that ICT had, because I've did this tape reading along with him, and you can see me annotate all of these things prior to him talking about them, you're going to see that these things are indeed very precise. And this was the PM session which I've had with a student, and I've showed him how consolidations and high resistance liquidity runs are going to be problematic for his trading and why he should avoid them. So this was an execution for me to show him that. And as you can see, I've took out my position here because I wouldn't want to endure this longer, and then the market indeed went to some of my targets, but I could care less. For the final thing of this video, what I want you to do right now is to join the free channel for direct insight. That is a place where I share valuable insights on the market via text. I directly share lessons with you as I learn them, and I discuss these videos and I add more conclusions via text. This was pretty much it with the video. I hope you guys enjoyed this one. I'll see you in the next one. Peace.